welcome back to the show, guys. Today is Monday, and I've been watching the market closely for the past month or so, and I just I had to do a video on this because this is actually very, very important, because this is what's going to be the end of us all, pretty much. But before anything, don't forget to share, subscribe, hit the like button, hit the Rumble button if you're watching this on Rumble, and subscribe to the channel. And let's get into this shenanigans, guys. The market's crashing slowly. Cryptocurrency is crashing heavily, very quickly. It's so sad. And I've talked about cryptocurrency many times, as far as people using it as an investment platform, which it was not designed to be used as an investment platform. So cryptocurrency, specifically Bitcoin, needs to correct itself some way, one way or another. So a lot of people are pulling the money out for various reasons. But I came across this this article from Axios. Markets in free fall as investors sell everything because rates are going up. Traders are hitting the sell button on virtually every key asset class, including stocks, bonds, and bitcoins, ratcheting up the fear factor on Wall Street and sending the S&P reeling to its weakest level in a year. Why it matters? Let's see what they say. The Federal Reserve is laser focused on taming inflation, and that's making markets increasingly jittery as the US economy sends mixed signals on growth. It's a fake growth. Fake. It's not even real. While we've seen the economy contract last quarter, the jobs market remains as robust as it's ever been. What? Are these people smoking crack? There's so many unemployed people right now. Meanwhile, however, China's extraordinary push to tamp down COVID infections via lockdown has sparked increasing global economic fear. This time, it's really different. The Fed's pivot from super accommodative to a fire and brimstone approach in the world of JP Morgan global strategist Marco Kolanovic to price pressures has sparked market volatility for weeks. But spiking bond yields, which are reaching to inflation and Fed expectation, underscore how government paper has relinquished its traditional role as a safe haven when stocks are in tumble, I guess. So blah 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 blah. Bitcoin fell to its lowest level since 2021, zeroing in on $30,000 in price value, more than half its record high last fall. What they are saying? Treasury Secretary Janet Yellen said on Monday that markets were functioning in an orderly way, but that there was potential for continued volatility and unevenness of global growth in the face of the pandemic. Still, Wall Street analysts are somewhat less. I don't know what the hell that word is. I'm not even going to try it. But look, guys. This is what happens when you play dirty. This is what happens when you play pandemic. This is what happens when you try to bring world order into a marketplace. So, all these people pushing for world order, pandemic this, pandemic that, this is what they had them in mind. So who is this going to affect mainly? If it's going to affect me, for sure, my 401k is going to go down the drain. So is everybody else's 401k, for that matter. Prices are already going up. Inflation is high. We haven't even hit hyperinflation yet, but we're very close. Interest rates are getting back up. Mortgages are back to about 5 or 6%. House prices are high, which means it's gonna slow down. It's gonna in some demographic areas it's gonna continue to slow down. Um, but most important thing is, with these price hikes, with this inflation, who's hurting the most? Middle class. Middle class is the one that's going to be hurting the most. Now, what's going to happen to the middle class? Well, middle class is going to rack up more debt. The poor, I mean, whatever debt they have, it really doesn't matter. You know, some of them don't even have any debt. They just don't have credit to carry debt. They're on government subsidies. The rich, they're just going to get richer. So this whole premise of, you know, making the middle class better fit, making the middle class more comfortable, BS. Now, the interesting part is this. I was having a chat with a good friend of mine today about, you know, the economy, and, you know, people buying homes, and, you know, how house prices in California have increased, and, you know, people making crazy offers over asking price. And funny thing is, I was actually talking to my cousin yesterday as well. You know, he said he's house hunting, and he was telling me that he's offering $400,000 over asking price. That's a price of a house somewhere in Midwest or in the East Coast. Still, you could buy a house for $400,000 here in the East Coast. He is willing to spend an extra $400,000 to purchase a property over the asking value of what the person. And you know what he told me? He's like, he was being outbid while he was putting an offer over $400,000. And he's like, he's getting outbid by cash buyers. What does that mean, guys? That means there's a lot of people who made a lot of money during the pandemic. A lot of money. When the PPE, the PPP loans, or whatever the hell they were, and, like, you know, the business loans, the payroll loans, and whatever it was that they were giving out freely to everybody, you know, come and get it. There was no checks and balances. There was no verification system set in place. Bunch of people just made up some applications, some crap, and they submitted, and they got millions for it. And fortunately, some of them got caught. Very few got caught. And now, these people who made millions, who made hundreds of thousands of dollars, are buying houses. They're overbidding on houses because now they can afford it, because, you know, they just came up on a few $100,000. So why not? Now, while the middle class will not be able to afford to buy a house anymore in the state they want to live in, where they have lived for many years, I chose to leave California. That was my choice. I do not regret my choice. I left because of the politics. I left because of the high prices. I left because of inflation in that state. I left because of the traffic. And I do not regret my choice at all. In fact, I'm very happy about my choice. I live in a state with 4 seasons. Life here is a lot more comfortable, a lot less stressful. I'm able to provide for my family very comfortably. I don't have to kill myself working. I work 8 hours a day, you know, on my regular job, and I have the rest of the day off. Now, I sometimes work 10 hours a day because I'm making up hours for an upcoming vacation that I want to prolong it for like a few days. So it's a trade-off that I get. You know, so if I'm taking 2 weeks off, I'm willing to work some extra hours to make up another week. So I have 3 weeks off with my family instead of 2 weeks. You know, and why not? Why would I kill myself to live in a state that pretty much gives you no benefit, absolutely zero benefit, and it's in decay. The infrastructure is in decay. Everything's expensive. $6 a gallon for gas. I have to sit in traffic for hours. I don't think so. Um, but the stock sale is gonna affect a lot of people living in California. It's gonna affect many of them. There's 401k is gonna go down the drain. Uh, uh, it's gonna everything's gonna start getting more expensive, guys, because as the stock market starts to crash, there's no trust in those in the market anymore. That's not good. Um, and this is where the recession is starts to set in, and you know, and people who were excited that got the pay raise a year ago, a couple of years ago, that pay raise means nothing because now they're actually spending more than what raise they got. So I don't know. This is not a good sign at all. And I don't want to be Mr. Negative, but we have to be real about it. This is not a good sign at all. This is actually pretty bad. So, will I give you financial advice? No, I will not give you financial advice. I will give you this. Watch the market closely and make decisions based on how the market is reacting. Um, uh, I'm always an advocate for real estate. I always say buy real estate because real estate is the most secure investment you can ever buy. Regardless if the house prices drop by 10-15%, you'll always recoup that money. But stock market it's a very tricky thing. I don't really like to play the stock market. I don't really have the confidence in myself to play the stock market, so I've never really played it. I've done a little trades here and there, but nothing significant because I don't trust myself with the stock market because it's very feeling based investment platform, and for me at least. For some other people, they see the numbers and they can crunch those numbers and they can make millions or hundreds of thousands of dollars, but that's not me. Uh, so I would say keep your eye out on the market. If you are a cryptocurrency investor, keep your eye out on Bitcoin and all the altcoins of what's happening. They've dropped. So I mean, I look at my portfolio. I mean, I tend I don't want to look at it every day, but now I'm looking at it every day, and holy crap, man, I'm down like probably like $3,500 right now on cryptocurrency. $3,500. So I'm probably gonna sell what I have now and probably buy back at a really lower price. Maybe I can make some of my money back down the line. But right now I'm down. So I'm gonna take my losses. I'm gonna cut my losses and leave it as that. So with that, guys, don't forget to hit the like button. Don't forget to share. Don't forget to subscribe, and don't forget to leave your comments down below so I can give you more stuff, guys. To that, have a good night and peace out.